foreign income.
Hi, welcome back. I wanted to take a minute or a couple minutes and explain a question that comes up with a lot of my clients who are working globally when they work overseas, and that is foreign income and foreign income exclusion. How do you report? Are you going to get taxed in the country you're working on as well as the United States? Do you have to report it in a European country or in a South American country or Canada or wherever, and the United States? Or how does that work? And the IRS recognizes the concept of avoiding the double taxation. If there's tax treaties between all these countries, they both agree that if you report on one country, you're not going to have to report on the other. So it works to both countries' favor. Specifically, though, what is required and how much can you deduct? So if you worked in another country or you were there for at least 1 year, 330 days, it doesn't have to be in that current year. It could be part of the prior year, all through this year. But the key word is there. Are you really there as a domicile for work days? You can exclude up to $120,000 of your income. So if someone's making $80,000 for that year or during that time, all of that would be excluded. If you're making $200,000, 120 of it would be excluded from your tax return. There's a form 2555, which is the form. If you have that, tell your tax preparer you need to fill that out, or he'll fill that out, she'll fill that out, so you can exclude it. And if you're self-employed, here's the kicker on that, though. If you're self-employed, we talked earlier about self-employment tax, that is not excluded. So you go in through all your income, deduct all your expenses, you still owe something. That SC tax is still going to be assessed because that's for your Social Security and Medicare. That tax is not excluded, but your income tax is. I have a couple clients who are permanently or for years and years working in London or Paris or Hong Kong or someplace, or Australia, and their business is there, but they're being paid by an entity in that country, or even a US W-2 or a US company. They can exclude up to $120,000. So I wanted to just go over that and make sure you remember. If you are on an assignment, I had one client who worked on an oil rig for 2 years outside Mexico, in the Gulf, which is outside the United States territory, and he was able to exclude all of his income for that time period while he was on the oil rigs, and then he went back to Texas and he became a regular W-2. So anyway, that's the subject on foreign income exclusion. If you are assigned, make sure you follow those guidelines and lower your taxes. Thank you.